Sunday night, 6 p.m. Eastern. While most of the world is distracted, the Asian futures markets open and the first domino tips. $688 billion erased. The liquidity that quietly supported American markets for 2 decades vanishes in an instant. Your retirement account is still sitting there, exposed, unprotected. The systems are already armed. The cell programs are loaded. And by the time you wake up Monday morning, what you thought you owned may no longer exist. This isn't a theory. It isn't a warning built on fear. It's arithmetic. The leaders of the bull market are about to be taken out. The safety nets are frayed, and the people who understand what's coming have chosen silence. The clock is already running. Most investors don't even realize they're on it. Welcome to Boring Economy. This is not entertainment. This is analysis for people who don't need their hand held. You already know the difference between noise and signal, between hype and data, between opinion and math. We don't dilute the message here. If you value briefings that sound like they belong in a boardroom instead of a studio, subscribe. That's not a suggestion. It's how you stay informed while others stay confused. And tell us where you're watching from. New York, London, Singapore, Mumbai. Because when Sunday night arrives, we'll know exactly who was paying attention. Now listen carefully, because time is short. While families finish dinner and the weekend winds down, the most dangerous financial event in modern history is lining up behind the curtain. Sunday night, 6 p.m. Eastern, the Asian futures markets open, and the illusion of stability breaks. This moment already has a name, Black Sunday, and it fits, because what happens in those first minutes will decide the fate of trillions in global wealth. The catalyst is simple. China has unloaded $688 billion in US Treasury bonds. That number sounds abstract until you understand what it really represents. For 20 years, Chinese capital acted as the permanent bid under American assets, the quiet buyer, the structural support. That support is gone. And when a foundation disappears, structures don't hover, they collapse. Most retail investors believe weekends are safe. Markets closed. Risk paused. That belief is fatal. Markets don't sleep, they migrate. Liquidity moves through Tokyo, through London, through machines that never shut off. Sunday night carries a risk few understand. The gap down. Not a decline. Not a pullback. A discontinuity. 10% erased instantly. No exit, no hedge, no reaction window. You don't sell. You discover. Algorithms don't hesitate. They don't assess. They execute. When volatility spikes and liquidity evaporates, they sell first and ask nothing later. And when Asia opens, that execution begins without discrimination. China's withdrawal creates a vacuum, and liquidity is oxygen. Without it, prices suffocate. Crashes don't happen because everyone sells. They happen because no one buys. When bids vanish, prices fall until someone breaks. That level may sit 30% below Friday's close. 5 years of gains, gone in minutes. Pension systems are already unstable. A 20% drop forces liquidation. Liquidation drives prices lower. Lower prices force more selling. This is how spirals form. Usually there's intervention. Liquidity injections. Emergency buying. This time is different. The printer can't run without consequences. Inflation is still alive. The dollar's credibility is already stressed. Printing now destroys the currency itself. They will try anyway. They will fail. And when the safety net tears, the fall accelerates. While stocks collapse, capital doesn't disappear. It relocates. One asset stands in the path of that. Movement, silver, money. Fleeing paper needs something real, and silver is waiting. Stocks collapsing are only the opening act. The structure underneath modern finance is fragile. Pull one card and everything shakes. As portfolios vanish, psychology takes control. And psychology always wins. Before sunrise Monday morning, withdrawals begin. Not deposits, withdrawals. This is how bank runs start. Banks don't hold the money. They never did. Fractional reserves mean promises, not cash. ATMs empty. Limits appear. Closures follow. Market crisis and banking crisis are the same event viewed from different angles. History confirms it. Always Monday. Bad news ferments over the weekend. By Sunday night, fear is saturated. By Monday morning, panic is automatic. Crypto doesn't wait. It trades continuously, which makes it the first outlet for forced selling. Before futures open, crypto flushes, violently, not because it's worthless, because it's liquid. Bitcoin could fall 40% in hours. then recover. Because it isn't tethered to failing institutions. That realization comes later. First comes fear. Now look at bonds. The real pressure point. When bond supply rises, prices fall. When prices fall, yields rise. The 10-year approaches levels that mathematically reprice equities. Above 5%, the S&P loses 30% of fair value. Instantly. Media silence isn't accidental. Retail must stay invested. Someone has to absorb the losses. The informed already positioned. Short exposure. Protective options. This is how transfers occur. Circuit breakers won't save anything. They pause fear. They amplify it. 7 companies hold the market up. 7. When they fall, nothing replaces them. Leverage finishes the job. Margin calls trigger forced selling. Forced selling triggers more margin calls. The spiral closes. Then contagion spreads. Real estate freezes. Buyers vanish. Buybacks disappear. Artificial support is removed. Volatility explodes. Algorithms accelerate selling. Geopolitical risk adds fuel. For a generation, this will be the first real collapse. Faith breaks, and broken trust doesn't return. Pensions fail mathematically. Promises shrink, but precious metals respond differently. Silver is small, undervalued, ignored. When capital rotates, it doesn't trickle, it surges. Triple-digit silver isn't fantasy. It's flow dynamics. This time even the dollar falls. Stocks down, currency down. That combination is rare and brutal. Preparation is measured in hours. Survival matters more than profit. This isn't the end of the world. It's the end of a story people believed too long. Liquidity is gone. The math is final. Sunday night, 6 p.m. Eastern, history begins. With that said, thanks for watching, and until next time.